Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, July 8th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading options and stocks, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the last week and see what happened after we've had our big pullback in the market. And we see, lo and behold, if we look at the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see all positive numbers for the week out of them. Looking at percent changes of 1.5% out of the Dow, 2.2% out of the NASDAQ, S&P 500 1.6%, and Russell 2000 up 2.9% to lead them all higher. Looking at year-to-date numbers, we see that we have very lofty numbers. So we have whole year gains sitting here. And look at the Dow, we see we're up 15.5% on the year, NASDAQ 15.2% for the year, S&P 500 up 14.4% for the year, and Russell 2000 up 18.4% for the year so far in 2013. Let's take a look and see what economic announcements we can see for the following week. As we well know that economic announcements can move this market, and things that we see happen in the news overpowers everything. Looking at those economic announcements for the week, we see that if we look on Monday, July 8th, the week after the 4th of July week, we see that we have very little coming out on Monday that is of any interest to us whatsoever. Looking at Tuesday, we see Tuesday, July 9th, and actually no big news there that's going to affect us anymore. We used to get a kick out of the Red Book, doesn't seem to do much to us anymore at all. On Wednesday, July 10th, though, of note, FOMC minutes at 2 o'clock. Very unlikely that we're going to hear much that's going to change the market out of the FOMC minutes. It certainly can change the market, but it's probably not likely, as the FOMC is actually pretty crafty in what they're going to say, so as not to have any knee-jerk effects in the overall market. Finally, we go to Thursday, where every single Thursday morning of every week we have 8:30 jobless claims, which certainly have in the past moved the market. We have import and export prices also at 8:30. So far we haven't seen a whole lot coming out in this second week of July. And then suddenly on Friday we got PPI, consumer sentiment, getting some kind of a read on what's going on in the economy. So overall for the week, not much happening on Monday, Tuesday, Wednesday. We got jobless claims on Thursday and a couple of biggies on Friday. So a week that is not going to be moved all that much by scheduled economic news. Now let's take a look at the SPX and see exactly what kind of trend we're in. Looking at the overall on the SPX on a 3-month chart, we see that we had our previous high up here in May, and we have not approached that, and we've been going on a downtrend ever since. And so we see that we had this nice little pullback with lower highs and lower lows. Coming out of the market, lower highs, lower lows, and we kind of popped above the 30 and 50-day moving average on Friday, as we seem to be in some kind of sideways movement here between about 1655 and that area of 1560 or so. Certainly what we could expect out of the market during the summer. Many times we'll have a pullback at the end of the summer if we look at some of the cycles, but at the moment the market seems to be sailing along very smoothly. VIX isn't showing us a whole lot. We did get that death cross where we're just about ready to cross over the 50 and the 30-day moving average there, which we'll keep an eye on. Very likely we're going to head back up to this previous high that we had here around 1650 would be my guess, as we continue on with this sideways movement through the summer months. So at the moment we're in an up cycle. In fact, let's look at a little tighter chart on this. Looking at the SPX, we'll go to a 1-month chart, and we see that we have an up cycle where we had our low on June 24th, and we've been bouncing up nicely since then, showing moving higher highs and higher lows. Again, here's an analysis of that 30 and 50 day moving average. Currently, we are in another upcycle, second day of that upcycle in this sideways trend. Expectations to go back up to this 1650 plus level and continue with this sideways movement through the summer. Don't expect that we're going to end up going to those previous highs during the summer, but remember, that's just another opinion. Looking at the SPX, we see that it's looking healthy, getting a nice little bounce for the summer doldrums where we generally have a lower volume. Now let's take a look at the Dow and see what the Dow looks like. Looking at the Dow, we see that we had a nice move up on Friday. Dow leading the market up, headed for that previous high, and we see that we have not quite got a crossover on the 30-50 there, and we could get a nice little bounce here as expectations from me, remember, personal opinion, this is our sideways move out of the Dow Jones. Looking at the NASDAQ, which has certainly a little more volatility to it, we see that we had a nice deep pullback well below that 50-day moving average. Again, no crossover on the 30-50 and a nice pop up on Friday. NASDAQ is sitting here pretty close to resistance, and we could see the NASDAQ actually pop up through and go up to those previous highs, as the NASDAQ has certainly had a nice little upcycle here off of that bottom, which took place all on the same day in all the indexes on June 24th. All right, looking at the Russell 2000, the big mover for the year and the big mover for last week. Let's take a look at the Russell, and we see, oh, look at that. Headed for that previous high, and will probably pop up through that if the market keeps on going. Nice up cycle on the Russell 2000. Good strength showing out of that as our small cap index keeps chugging along. What would we expect out of the VIX with this comeback out of the markets? Well, let's take a look at the VIX and see if we did go lower as would be expected. And there we are, back below that 15 level at 14 something. So we see that the VIX headed down and will continue probably giving us a lower low until we get our next high out of the markets. So remember, the VIX, the normal range for it is somewhere between 12 and 15, and then it has these aberrations that occur now and then where it pops up through it, which we just finished one of those as we went into the summertime. All right, let's take a look at some of our other sectors as we check out the sectors by looking at our ETFs for those sectors. And the first we're going to look at is the bond sector, looking at TLT. And there's been a bit of a downward move out of the bond sector. As we see, we are in a bear market in the bonds. And look at that Friday, as we saw, with volume, much bigger move to the downside with a big gap, as we're showing grave weakness in the bonds and not responding normally as we would expect the bond market to do, as the bond market is definitely in a bearish move. All right, let's take a look at that safety haven gold and see exactly what's that doing. Some kind of indication of what kind of fear in the market, and we see that we don't have much fear in the market as gold is approaching its lows of the year. And we may see it break down in a discussion of it going even lower. So gold nowhere near that $1,800 an ounce it was, and not a lot at once it was during the last year, and we're not showing a lot of fear in the market at this point, as things may not be growing as fast as we would like, but we're not showing any great fear of big recession coming. All right, next let's take a look at the spider, and we'll see what kind of volume we had on Friday. And you see that the volume has gotten quite low during the summer, but we see that we had that spike on the pullback. And then we basically had our sell-off and started up on our upcycle. And you see we're showing, kind of average or below average on our moves as we're heading back up in the summer doldrums with our sideways trend in the overall market. And finally, let's look at financials and see how the banks and the financial markets are doing by looking at XLF, our ETF for our financials, and look at, we're very near that previous high, and we'll see whether we actually go up and through that. 30-day did not come close to crossing the 50-day moving average. Had some consolidation, pulled back as the market pulled up with it pulled back as the market pulled back, and we see where we're heading back to those previous highs. Could see a breakout out of XLF. Of course, we don't have any huge breakouts in the ETFs anyway, but they certainly have, one of the benefits of the ETFs is that you have that benefit of diversification. And finally, let's take a look at oil and see where oil has gone with the market beginning to pop back. And look at that. There goes the gas prices. Broke out of that low area that we have, and we see that oil has broken out. And oil has shown us that breakout the last 2 days of last week as we broke out of our 3-month range. So with that, we see that our sectors, some responding as we expect. The financials responding the way we'd expect. We see no great volume during the summer out of the spider, and bond market seems to be real depressed as we go into these summer months. So with that fact, those of you that are gold members, stick around. We'll take a look at our stocks to watch that we've been watching for month after month. And this is Butch Shorak, Options University Market Forecast. It's Monday, July 8th, 2013. And I want to thank you all for being here, and we'll see you next Monday on Market Forecast.